general presentation, so we've got to get into a little bit more deeply what is going on in each of those places. For those of you that know City's Outlook, it was its 18th year this year. The one consistent factor in the report is the top 10, bottom 10 tables across a range of indicators that sit at the back of the report. So it's a real treasure trove of data on individual places, but also then to understand how places perform relative to one another, which I'll say a little bit on later. But the focus of the presentation today is going to be on the special chapter that was in City's Outlook this year, which focuses on wage differences across the country and what this means in terms of what places need to do, particularly through industrial strategy and then their local growth plans if we are going to see an increase in wages. So what I'm going to do is take you through that presentation. It'll take about 15 minutes or so. And then I'm going to give you a very brief demo of the data tool that sits on our website, which hopefully will be of great use. And then we'll have a short question and answer session at the end as well. So as questions occur to you, please do put them in the Q&A function through Zoom, and we will then get to them there. And if I don't get through all of them, I'm very happy then to pick anything up after with people as well. That's enough in terms of introduction. Let's get into what the report says for the different cities of Yorkshire and Humber. So first slide, 3 things to learn from this slide. This chart shows wages across different regions of the UK, and it splits those regions into urban, which is the light green bar, and non-urban, which is the dark green bar. And there are three key things to take away from this chart. First is that there is variation across the country. I think that won't come as news to anybody, but perhaps the scale of variation is the interesting part of this. And from a Yorkshire and Humber perspective, you can see there that being towards the right, it is not the poorest region in terms of workplace wages, but it certainly is towards the bottom. The second point to make is that in every region of the country, overperforming ones, underperforming ones, that light green bar, that urban bar, is higher than the non-urban bar in every single region. So cities are leading their regions in every part of the country, even if that region is underperforming. And the highest wages available on average are in the urban areas of each region, Yorkshire and Humber or Wales or wherever it might be that we are talking about. But the third thing to note is that the variation that you get between cities is much greater than what it is between non-urban. So the reason for this disparity that we see across the country isn't principally because of the underperformance of non-urban areas, which in general perform much more equivalently across the country. There is variation there, but nowhere near as much as what you see in terms of differences on the green bars. And the real issue for underperforming regions is that while their cities do lead the regional average, their cities underperform, even despite being sort of the leaders within a relatively weak region. And that partly explains why the regions perform so poorly overall, is because these cities, while playing a leading role locally, are not leading the regions the way they should be, which means that regional performance is poorer than what it otherwise would be, but also means national performance is lower than what it otherwise should be too, because these places should be playing a much bigger role, both in the regional and the national economy too. So then that gives us good cause for trying to understand what is going on within these cities and large towns. And that's what we will then go on through to have a look at. But the question is, first off, is what drives this? Which parts of the economy are causing this underperformance? And it's important here then to split the economy into two groups, or split businesses into 2 groups. You've got your local services businesses, those companies that very much serve the local market. So think retailers, cafes, bars, restaurant renters, conveyancing solicitors, etc., etc. So that's group 1. And then group 2 is what we would describe as being the export base, the tradable base of a place. Those companies that sell to regional and national and international markets. So we're very much selling beyond their local boundaries to a much broader set of potential customers. Now, this chart starts to show why that split is important. So let's focus on local services to start off with, those high street style businesses, which are represented by the dark green dots. Keep on making that mistake, the 2 greens, dark green dots. And you see there towards the bottom of the chart. And what we learned from those green dots there is, 1, local services tend to be fairly low productivity, which then has an impact in terms of wages. And secondly, that there isn't a great deal of variation across the country in terms of the productivity of local services companies or local services jobs. So local services type activities are not the cause of the wage differentiation that we see across the country, because broadly speaking, a hairdresser in Plymouth is probably as productive as a hairdresser in Wakefield, let's say, and their wage levels are probably pretty similar as well. The issue or the differences come from the exporting part of the economy, the tradable base part of the economy, which is represented by the lighter green dots. Now, two things to learn here. One is that they tend to be much higher productivity, higher productivity than local services activities across every city and large town that we're looking at here. And secondly, there's a much greater amount of variation across the country in terms of the performance of the export base. And it is the export base and the performance of this export base that does drive those differences in wages that we see across the country. Now, from a Yorkshire perspective, hopefully you can see it on your screen because it's fairly light. We've picked out all of the cities and large towns that we look at in Yorkshire. If you look towards the left, York and Leeds are actually doing pretty well. The productivity of their export base is above the national average. That's good in terms of economic performance. It then has a knock-on impact on wages, and wages in those two places tend to be higher than elsewhere within Yorkshire. But as we go to the right, you can see that the majority of the places, 7 out of the 9 cities and large towns that we look at, actually are below the national average in terms of the performance of their export base, which then has that knock-on impact on wages. So there is a challenge here in most cities and large towns in Yorkshire around the performance of their export base, and that should have big implications for how the local growth plans focus, as the mayors think about writing them, focus on the export base and then thinking about, well, why is this export base underperforming and what should we do about it? Now, what we do in Outlook, and I'll run you through it now, is we say, okay, well, let's try and measure that export base on a range of different indicators, try and break down the types of things that these local growth plans should think about. And so we set out 5 different aspects of the export base for local growth plans to think about, and then are able to rank all cities and large towns on that basis. So how do they measure up? Let's go through the first, all 5, but let's look at the first ones first. Seems a fairly logical thing to do. And the first one is size. So how big is the export base? Is it a large one, which then means you're bringing in a lot of prosperity, a lot of money from elsewhere, or is it actually quite small relative to the population size of an economy, which then means that your prosperity engine just isn't very big. Even if it was strong performing, if it's pretty small, then it hasn't got much prosperity to spread. And we've correlated this here in this chart against wages. And you can see that there's a positive correlation between the two. The larger the export base, the higher average workplace wages tend to be. Now, from a Yorkshire perspective, you can see there that Leeds does pretty well on this front. It has a fairly large export base. Its export base is larger than what its population would suggest. That's a really good thing. But for most of the other cities and large towns, you can see there to the left, they fall at the smaller category, where their export base is undersized. So trying to increase the size of that export base is going to be the first challenge for local growth plans if they are going to increase the amount of prosperity available. And Sheffield in particular is not doing particularly well on that measure. The second one is the nature of the export base and the makeup of it. And what we particularly focus on is how much of this cutting edge of the economy has a city been able to attract in, because it's these cutting edge type companies, think AI, think fintech, think life sciences, that are likely to increase productivity today, but also probably have a big influence on productivity performance tomorrow as well, in terms of shaping tomorrow's economy. So the ability of places attracting these emerging elements of the economy is going to be pretty important in terms of prosperity. And what this map here shows is, I think, 2 things. You've got a national-wide story, which is most of the dark purple dots are towards the bottom right of the UK. So the Greater South East has been much more successful at attracting in these cutting-edge businesses than elsewhere in the country. And then when we look in Yorkshire, we see sort of a similarly sort of mixed picture to what we've seen in some of the previous slides. Leeds doing pretty well there, York doing pretty well there, but most other cities in large towns in Yorkshire actually have got some of the lowest shares or lowest numbers of these cutting edge companies of any city or large town in the UK. And that's a real challenge in terms of the wider prosperity for for Yorkshire is that if these places aren't attracting in these types of companies and cities are their natural home, that then poses a challenge for the amount of prosperity that has been generated in the region. Number 3, adaptation. Now, you don't need me to tell you that there's been a huge amount of change in the UK economy over the last 40 or 50 years. And indeed, when we look at the data, we see we go from the early 80s, where manufacturing very much dominated every export base in every city across the country, through to an evolution through to services playing a much larger role. And when we get to today and sort of look at a snapshot of today, we can see that has an impact in terms of the prosperity that is then generated. So what this chart shows is it looks at of all the export base, what share of that is in service type activities? And again, it plots that against wages, with wages being the key thread through this. And you can see there's a positive correlation in that those places that have adapted the most, those places that have got the highest share of services activities in their export base, are the ones that tend to have higher wages. So again, Leeds and York doing pretty well on that front. Sheffield actually doing relatively well on that front as well, but the majority of other cities and towns in Yorkshire are towards the left-hand side, and still a large share of their export bases are in manufacturing type activities. Now, this is particularly important, I think, because when we look at how local strategies have been written in the past, and indeed I wouldn't be surprised if this happens again in the local growth plans that are being written currently, advanced manufacturing always gets a really special role. It happens nationally, it happens locally in these strategies. But we see here already that those places that are adapting towards services are what places that do well. And if we think that we expect the UK economy to continue to specialise in high value services, those places that have adapt the best are the ones that are best placed to take advantage of that. Those ones that haven't, raises question marks about their future performance. And so this isn't to say that advanced manufacturing won't play a role. We do just need to get that in balance and probably start asking questions about not what is in an economy already, but potentially ask the more difficult question about what have places not got, and how do you try and address that? How do you remove the barriers that are preventing investment, particularly in tomorrow's economy, with implications for wages? Fourth one of the 5 measures is diversification. So how much of your export base is in any one particular sector? This is exactly what this map shows. So it looks at of the export base, what share is in any one particular SIC code, Standard Industrial Code, for those that means anything for, but broadly any one particular sector. And let me give you some examples to bring that to life. So Aberdeen is the closest to a one-horse town of any town or city in Britain today. Almost half of all jobs in its export base are in oil and gas. Now, that's fine if oil and gas is doing well, but if oil and gas starts to struggle, which indeed it has over the last 10 years, that starts to have a much greater knock-on effect elsewhere in the economy and on prosperity. And we can see that, we've got a long history of that in terms of places that were very dependent on mining, for example, or shipbuilding, or another form of heavy industry. Very dependent on that industry. That industry then declines. That place then goes into a long period of struggle. Plymouth comes out second, but quite close behind it are Wakefield and Doncaster, from a Yorkshire perspective, that have a large share of their export bases in particular industries, in which I think both of those are distribution from memory. So that's a particular challenge for Wakefield and Doncaster, that not only is their export base is actually quite small, but what they do have is dominated by one particular sector, which then raises questions about the ability to adapt, the ability to move into new areas in the future. I think particularly in those places, we have to be very wary about writing strategies that call for building on key strengths, because in this basis, it is a couple of fairly low productivity activities that dominate the export base. And the real question is not what they have got, but what they haven't got, if they are going to be more prosperous in the future, are going to have higher workplace wages than is currently the case. And the 5th and final one is location, because different parts of the country play different roles in the national economy. Different parts of a city region play different roles in the city region economy, and different parts of a city play different roles in the city economy too. This is really important to note when we're thinking about writing economic strategies, because that then means that policies will need to be different for different parts of a city or a city region, and should expect different outcomes from an economy perspective for different parts of the city or the city region as well. So what these two beautiful concentric circles do is they split the country into 4 categories. You have city centres, which is the light green. You have suburbs, the rest of cities, which is dark green. You then got the hinterlands around cities, a commutable distance in, which is that light purple. And then the dark purple is deep rural areas. So from a Yorkshire perspective, hinterland location may be somewhere like Harrogate, for example, whereas a more deep-lying rural area may be somewhere like Settle or beyond. It looks at 2 indicators. What share of total land mass, land area, do these 4 areas cover, which is the circle on the left-hand side? And then what share of the total cutting edge of the economy, these new emerging companies like in AI and fintech, etc., what share of those businesses does each area have? So if we focus on the 2 green dots, bring cities, suburbs and city centres together, cities in total accounting for about 8.7% of all land, but about 61% of these cutting edge businesses, which is telling us that the future economy is very much shows a preference towards urban areas that we need to be thinking about when it comes to thinking about how does South Yorkshire attract in this type of activity, or how does West Yorkshire attract in this type of activity? Well, it's principally, not exclusively, we're principally going to be through having cities that are seen to be good locations for these things to locate in. But let's break that city bit down a little bit more and just focus on city centres. They account for just 0.1% of all land, but 18% of these types of businesses. So these cutting edge businesses very much show a preference for a city centre location in particular. And if a city hasn't got a city centre that is an attractive place to come and do business, to come and invest in, that's going to be a challenge in terms of prosperity for the city itself, but also for the wider region as well. So let's bring all of those 5 indicators together and give you a summary chart to show how the cities and large towns in Yorkshire perform. Now, what these radar charts do, or how to read them, is that if the line is close to the edge of the radar chart, it's doing well on that indicator. If it's close to the centre, then it's not doing so well. And those cities that have got all of their line closer towards the centre, in particular, have got a challenge across all 5 of the different indicators. So I've split the cities and large towns into 2 charts just because it was a little bit easier to see. I've done this purely by alphabetical order about whether they fit on the left-hand side or the right-hand side. That was the only the reason why one fits on one or the other. And let's pick out a couple of cities just to explain what this is showing. So let's look on the right-hand side, and let's look at Leeds, which is that light green line round. And you can see there that actually Leeds has got a very expansive shape for that. It's pretty much at the top of the rankings for all 5 of the measures that we assess the export base on. It's doing really well. So it's got a large export base, got quite a large share of cutting edge companies, probably do slightly better, but is doing pretty well. A lot of its export base is in services. A lot of the cutting edge which it has, and which is a large number, is in its city centre, and it tends to be fairly diverse as well. It's not focusing on just any one industry, which then gives it a best possible chance for growth in the future. But if you then contrast that, say, to Wakefield on the right-hand side, of Doncaster on the left-hand side, you can see there by looking through all the indicators, actually those 2 places do struggle on all 5 of those measures. They've got small export bases, small cutting edge, small share of services in their economy, not very much of the cutting edge in the city centre, and not especially diverse export bases as well. So clearly, if we are going to improve the performance of those 2 places and improve workplace wages within them, there's a whole number of different factors that we need to consider where the export base is not doing particularly well, that we will need to turn around if we are going to make those places more prosperous. So to wrap quickly in terms of the presentation, export base is the part of the economy we need to focus on. That trading part of the economy, that's a prosperity generating engine of different places. That's what explains wider wage variation across the country. And here's 5 different measures for places to think about when it comes to trying to improve their export base. Now, hopefully you've had questions flowing in as I've been doing that, and that's provoked a lot of debate in your mind. Just before I move on to the questions, I'm just going to show you what our data tool looks like. So as I mentioned at the start, Cities Outlook has a whole host of data on it across things looking at aspects that measure the economy, which I'll show you which those categories are in a second. How do you get here? You go to centreforcities.org, then you click on data, and then you click on data tool, which should be the top item on that web page, and this brings up this page here. And if you scroll down, and then you can start to see the data. So we have a number of buttons here for the different categories that we look at. So population, productivity, housing, living standards and environment. So quite a broad breadth of indicators for you to be able to look at. And if we then select skills, and scroll down a little bit, then you can start to see the skills data. So you can look at high-level skills, no formal qualifications, and GCSE performance. And then if you scroll down, you can see a top 10, bottom 10 of that indicator, a map of how well places are doing, and then you can see a chart below as well, where you can get into some more of the detail on this data. So from a Yorkshire perspective, you can see here that this is share of population that has a degree. Hull there, pretty low down, a third of population. Doncaster, 30% of population. Wakefield there as well, 29% of population have a degree, ranking them very much towards the bottom of the 63 places that we look at here. Go a little bit higher up, better news story, perhaps not unsurprisingly, given what I've showed you on the previous slides, that Leeds and York both do pretty well there. So 54% of residents in Leeds have a degree, and similar sort of figure for York as well, which clearly would have an implication for how attractive these places are in terms of attracting in these cutting edge, high skill exporting activities, because they're much better able to offer access to skilled workers than what some of other places in Yorkshire are. I'm going to stop the sharing there. That is the end of the presentation, and we have a couple of questions in already. So what I'm going to do now is I'm going to run through those questions. Please do keep them coming in as I answer these ones. So first one from Chris Diamond. In the spider diagrams, Sheffield is very low on size. Is this the proportion of the export base compared with population size? Yes, it is. So in absolute terms, Sheffield has got a large export base. But what we want to try and understand is how large should that be relative to its size? And what we do then say, well, let's look at the share of national population that Sheffield accounts for. Let's then look at the share of the exporting output that Sheffield accounts for, and how those two things measure up. And what we see is that that share of export base is smaller than the share of population, which is pointing to the fact that actually it is undersized. We should be expecting big places in particular to be overperforming on this metric, to always be having export bases which are larger than the population, because they're meant to be spreading prosperity over a much broader area. Sheffield doesn't do that, but in fairness, most other large cities don't either, and that's a UK problem of the underperformance of big places, of which Leeds is one of the counterpoints to that, and Leeds does pretty well on that front. Paul Hayes. Hello, Paul. We haven't spoken for some time. So any views on the Huddersfield, Kirklees economy? Did the arrival of the university there make any real economic difference? So the specifics of that question is that I don't know, because we haven't looked in detail at it. But the role of university is quite an interesting one, because I think we can look through and probably see a number of places that have a university and struggle, and we can see a number of places that don't have a university and do pretty well. And examples of that would be Milton Keynes until very recently, Aldershot, Crawley, for example. And the key things for those places is that they are attractive places for these high-skilled companies to come and invest, because they've got access to lots of skilled workers, and probably good transport links in part, and access to London is probably having some sway in that too. And all these other factors are making them attractive places for investment, despite not having that university there. When we've looked at the impact of the universities on the cutting edge of the economy in particular, we do see that those research-intensive universities, so think University of Sheffield, University of Leeds, for example, do seem to have some impact on where some of these cutting edge locates, and they tend to cluster more closely towards that research-intensive university. But we didn't find much evidence that it actually increased the overall number of cutting edge firms in the economy. It just determined where they're located. And so the jury's still out about exactly what the impact of universities is, and I think there's more work to be done there. Pete Mudge says, is this information freely available to share? Yes, it is. It's all on our website. So I was going to say this at the end, but I shall say it now. The report is available through centreforcities.org, as is the data tool, as our podcast, and as our stream of blogs, which we continue to write on the analysis too. And it's all there for you to freely consume as you see fit. Adam, another familiar name. Good to hear from you as well, Adam. Can you comment on the relationship of unis, i.e. Doncaster does not have one? Sorry, I should have read that before I said that. As we, same answer for before. And then Thomas Hutchinson says, what examples of policy to increase the export base are best in class? Good question. So, for example, does building localized trade and relationships between regions of the UK and internationally, similar regions get leveraged by companies and utilized to build new export bases? So that's a question about trading relationships, I think, and sort of city diplomacy in order to try to build links. So I think that's a pretty underdeveloped area of understanding. I think places put a lot of stall in going off and trying to build trading links with certain places. We don't really know what impact that has. I think probably what we do know, though, is that those places that do have a large number of exporting activities are probably serving a number of different markets as opposed to serving any one. And so the key question is, how do you get these high-skilled businesses in the first place? Rather than, oh, we just need to pick off a particular area of the world or to trade with. So it is that focus on just the export base generally. Why are these companies not coming in the volume that we want them to? What are the barriers for that? And then trying to remove those. And I think key things there will be around skills, will be around availability of commercial space, particularly within city centres, given that they show a disproportionate preference for a city centre location. Public realm associated with that, transport connections and housing as well. And thinking about very much those place-based things that will influence where these companies go, which tend to co-locate with one another as well, which suggests they're looking for similar types of activities rather than necessarily being overly specific, either on the sector we want to think about or the trading relationship that they might have. Adam, you've got another question. I'll answer this one because I answered your other one already. So should Huddersfield and Doncaster, for instance, focus more on more advanced manufacturing? I mean, I think that could be part of the mix, but I think the key thing is not to put too much stall on that. And I think quite often we sort of say, oh, there's a manufacturing background here, so it's easy to extend into advanced manufacturing. But certainly in the report, we look at this and say, well, what's the relationship between historic advantage in manufacturing and jobs in advanced manufacturing today, and we don't actually really see any relationship there. So just because you had a manufacturing base in the past doesn't necessarily set you up for an advanced manufacturing base today. So it's being careful about that, but it's also being careful in the context of where we think the UK economy is going, and that we don't set too much store on that manufacturing story, and we do think about the performance of places in terms of their ability to attract in some of these exporting services as well. So Sophie Wilson says, great number of loads of questions in now, I'm going to run out of time. In Sheffield, our university's Advanced Manufacturing Research Centre is technically in Rotherham. Has that already been accounted for? Is there a way to see the data divided by county or mayoral areas? So yes, it has. Our definition of Sheffield is Sheffield plus Rotherham, because the built-up area of Sheffield very much runs into Rotherham local authority. So it is included in there. We did do a report on the AMRC a couple of years ago, which is definitely worth having a look at, which showed that it does play a role in the regional and the national economy. But that role, because it is a fairly small site, is fairly limited. And so it's understanding, it's great that Sheffield has got this this cutting edge engine in its economy. Sheffield Rotherham has got it, but the key challenge is that it hasn't got a number of other engines in its economy to be driving prosperity. It needs more, more of this sort of exporting type activity, particularly within a city centre. In our view, it's going to do better in the future. So someone who hasn't left their name says, Sheffield's scores seem to vary significantly from good to bad, whereas York and Leeds are more consistently doing well. What are the factors that cause a variation, which don't seem to be impacting Leeds and York? And does it come down to professional and financial services being more dominant in Leeds and York? Good question. So York, to some extent, I think is a bit of a special case because of the nature of it, of sort of medieval city, etc., which sets it aside to some extent. So let me focus on Leeds, because Leeds and Sheffield are similar size. I think there's a bit more to learn from that. Two key things I think that separate them. First one is that Leeds has got a much higher skilled population, a relatively higher skilled population, certainly fewer low skilled people than what Sheffield has got. I think that makes it a more attractive place for these footloose industries to come in and invest. I think the second one is it's got a city centre that performs more strongly as well. Which has then, I think, helped it in terms of attracting in these more knowledge-based type activities, some of which is financial and professional services, but some which goes beyond that too. Whereas a key challenge for Sheffield is that its city centre hasn't functioned particularly well as an economy over the last 20 or 30 years. And I think indeed policy until very recently has probably focused much more on out-of-town sites, particularly around the Meadowell area, not just in terms of the shopping centre that went in, but also the office space that went there. I think if we could sort of wind back time and put the enterprise zone that went in there in the 80s or 90s into the city centre instead, I think Sheffield's performance might look a little bit different than what it today than what it is actually the case. So I think that city centre element is particularly important. And I've just realised that we're 12:32. Let me take one more question. So I take it from Tony, which says, Tony Zeelinger, hopefully Tony, I got that right. Says, scale up new technology businesses take at least 10 years to expand significantly. So are these part of City's long-term strategies? To answer your question directly, yes. I mean, if they take a long time to scale up, then that means that requires a long-term strategy. But I think there's a question there about what does this mean for the short term, which is something the Chancellor gets a lot of heat for, which is you're making these announcements, but actually it's not going to make a difference tomorrow. My answer to that is that if we don't see an improvement in the attractiveness of places to these types of activities, they're never going to get better. Now, if that means we have to wait 5 or we have to wait 10 years for that prosperity is still to come through, that's better than waiting forever. So I think that we shouldn't discount it for the fact that it is long term. But there'll be other things that can be done too in terms of making the place a bit more attractive. That probably will boost the profitability of companies maybe in the short term that already exist there, as well as some of that longer term stuff too. So I don't think we should be discounting these types of things just because we think the payoff is long term. You know, some of these places in Yorkshire and Humber and indeed elsewhere in the north have been struggling for much longer than 10 years, and we don't want that to be the case into the future. So getting these decisions right now, which haven't been right 10 years ago, 20 years ago, 30 years ago, 40 years ago, is really important if these places are going to be more prosperous in the future than what they have been in the near past. I'll bring that to a close now to make sure we don't overrun too much. I hope you enjoyed that. I hope it was very informative. If you have any more questions that I haven't run through or occurs to you after, please do drop me a line. Otherwise, as I said, you can find all of our material for freely available on our website, centreforcities.org. Please do go and play with the data tool, go and read all those associated things that we published as well. And I hope that's helpful in terms of trying to bring a bit of clarity to both what national policy should be doing, but local policy as well. Finally, I should say that I am going to be in Huddersfield and Wakefield on the 17th and 18th of February. So there's anyone on the call who would find a face-to-face meeting helpful, please do drop me a line and we'll see what we can set up. But until then, till next time, take care. Good to see you all.